Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about USD CAD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just created a perfect correction exactly to the zone, which is in between the 50% and 0.618 of the Fibonacci taken on the monthly impulse, which is a quite strong area of previous monthly resistance turned support, which is in confluence with the Fibonacci levels, creating confluence of support at this level, which we could in fact expect the market to reject to the upside. Now, if we drop down on the weekly time frame, what do we have? From a weekly perspective, we can notice how during all this move to the upside, there is one candle not related to the move, which is exactly this red candle here, meaning that this area is previous weekly resistance turned support, which as the market is testing it, we could expect the market to reject it to the upside. So also here on the weekly, everything seems quite bullish and we could expect more bullish continuation. Going down on the daily time frame, what do we have? Now, from a daily perspective, it is quite clear how the market has just created an M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, if we will actually have the creation of this M pattern, there is a good probability to see a potential reversal higher for the completion of this M pattern at the neckline. If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, what we can see by looking specifically at the CAD is that with the last reports, net positions have continued to getting decreased. We went from having a positive net positioning of plus 27k net positions with 51k shorts compared to only 51k longs compared to only 24k shorts, all the way down to now having more shorts than longs with 56k shorts compared to only 25k longs. So completely inverted situation. With minus 30k net positions, showing how in time institutions are continuing to moving to the bearish side of the CAD, which makes USD CAD strong because a bearish CAD makes USD CAD strong. And keep in mind that by checking the data on the CAD, we are already checking CAD USD because all currencies on the spot are traded against the USD. So if we want information on USD CAD, we simply have to reverse everything that we're reading here. So in a situation like this increases the probability of seeing a reversal to the upside and completion of this M pattern because the CAD is continuing to getting weaker and weaker. Therefore, if we will have the creation of this M pattern as we're currently having, how we could be approaching the potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential reversal to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that you have the possibility to join directly from this website to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. Go and check it out at least at transparentfxtrading.com. The link is also here in the description just below this video. And looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.